Good morning, everyone. As you can see, it's 8:30 a.m. here. This is Josh Albo. In the video today, I'm going to be going over my technical analysis I did for ticker DWT on September 30th. Held it for a day. I believe this was such a not fun trade, but this was, I want to say, if I'm pretty sure about which it was, either DWT or Boyle, or maybe it might have been the T-Triple-Q, which is the Nasdaq leverage fund. But the reason I say I think it's this one is because this one was also a day trade. It might have been Boyle. The Boyle was supposed to be, I think it was about a $150 profit. But let's take a look at it. The reason I say one of these trades is my favorite because I want to say by the time I had put the trade in, gone to the bank to set up a new bank account on a new bank for an incentive and get more information if I can scale that and give that to anybody. Like, I was maybe gone like 15 minutes for one of these, and I checked my phone, the sell order had already gone through, and I had taken the profit, and it was like extremely quick. um, Still, by all means, the big picture is that we want to be making good trades, and like making good trades leads to making good money. If you trade for money, that's a good way to lose because then it's emotional, and versus if you trade to make good trades, then it's a skill set mentality. So the dates were 9:30. I bought at 5:42. So if we go 9:30 ish, it's right in here. 9:30 and 5:42. So we're up in this next day, maybe. Yeah, 5:42. What do we like about this trade? One, here's what we don't like, definitely. Even though this is the 180-day chart. Okay, so if we look on the RSI, completely oversold, which does not make that a good trade. I don't know if I was looking at this when I bought it, but this was 15 days prior, so I can't even use that excuse. I don't mind that it is showing confirmation on top of the SMA line, which is this one. I don't know that I have the Bollinger Band set up again at this time. I didn't set those up till recently. The volume was good on it. The main thing I'm seeing that was good about this trade is breaking over the 9-day SMA and then the confirmation. Still, big picture, it's below the 180-day SMA, which is not a good factor. It's oversold, which is not a good factor, even though we got in more. We got in here, so it's still like a bit early for the oversold. We did have good price strength between the SMA line and the the price itself. So we had good price action in here as it confirmed up and went up. But like again, so this was not the trade I was talking about, but it happened to be profitable. I don't like making trades that happen to be profitable because they set bad habits long term, and the goal is to have good habits to make good profits. This is the 20-day chart, and I'm just not sure. I'm even gonna be able to see this on the 20-day because we just passed the 20-day on the previous one, so we can't even see that there. But the other thing I guess we could look at is I didn't feel my down. I felt my upside potential was much higher than my downside risk. So we did have a sell off previously. I did wait for it to confirm from that same sell off. So in essence, I may have looked at it and said because it was oversold here 10, 15 days prior. This is probably when I put it on the watch list for my losers list. And then as it confirmed up, my thought process was my risk may have been like that same $100, but it had way more upside from going down $1 versus from a support and resistance standpoint, the upside was the 1028. So I had $6 upside, but only maybe $1 downside based on previous patterns. And also, the other thing I liked is when we look at the RSI, it's got a pattern of being oversold and then almost overbought, oversold, overbought, and like when it's oversold here and it goes up to overbought here, this is still, that's not going to show me that number, is it? This is still 13% or a dollar. So if I buy 100 shares for $500, I'm only risking $500, which is extremely low dollar risk, and I'm still only risking 1 to 2% of the entire account value, which is what all the books are saying, what Charlie says. Some people say 3%. I've started that in a couple books, but I like to keep it, not to be conservative, but I'm not upset if I miss a trade because I want to cut short at that 1%, because in the math scale of it, when I look at the 33% being correct 33% of the time to be profitable, I'm okay with missing those, I guess, so far. But again, oversold here, dollar plus spread 16%. Oversold here, and even if we wait till, okay, oversold here, wait for the confirmation, we still get another 20% gain right in here. Oversold here, wait for the confirmation. Well, there's not really confirmation here, but still 10%. So there was a constant pattern of being oversold and overbought. I probably should have looked at what the heck I was trading first. From I don't know if this is an index or what, but happened to be a profitable trade. I was gonna say, is that it? Excuse me. But from a trading standpoint, the good things were it has a pattern of oversold, overbought. So let's make a checklist. The strength factors. Pattern of being oversold, overbought. Had good price action in here. I did wait for the confirmation. The bad things on this trade were it was getting towards the oversold point. It was under the 180-day estimated line. And it was also at the top of the Bollinger Bands, which usually, from what I understand, from what I've read and learned and listened to so far, my understanding is that when it's on the top line, it tends to bounce down, as you see here, and then back up to the top and then back. So between the two.